On this episode of Real Estate Insiders Unfiltered, we sit down with Stephen Franke from C1 Insurance. He's the vice president and co-founder. Yes, we're talking about insurance, but we talk about climate change, the potential risks that are going to be coming, how they're writing these potential risks into policies. We talk about the mess of California and Florida. You're welcome. And more importantly, a really interesting approach to how the home buying experience will be using an insurance agent to understand risk as well. It's going to be an incredible show. Tune in. You talk about it privately, we talk about it publicly. This is the Real Estate Insiders Unfiltered podcast. Welcome again to Real Estate Insiders Unfiltered podcast. I'm your host, James Dwiggins, along with my co-host, Keith Robinson, aka Crazy Uncle Keith.
Yes, sir.
Tell us, we've got Stephen Franke with C1 Insurance. He's the VP and co-founder there. What are we talking about?
Yeah, riveting, right? A conversation.
Insurance.
A conversation on insurance. I know y'all can't wait to hit play on this episode.
But it's actually...
It was one of the more interesting conversations I think we've had since we started doing this. He dug in on the cost of insurance and some of the problems that have arisen over the last, say, 10 years or so, and where it's headed with the cost of insurance as well. He talked about climate change. James wanted me to make sure I did not call it global warming.
We didn't want to piss anybody off. Yeah.
So he talks about climate change, how that's changed some of what's going on for insurance. We dug in on California and Florida and how they're the poster child for a hot mess when it comes to insurance. And then a really interesting conversation about how we might just need an insurance advisor as part of the home buying process. And that might be a good way to approach how you're doing it.
Let's get going.
Let's get it.
Stephen, welcome to the show. We are super excited to have you here to talk about insurance. Just kidding. So
nobody's ever put those two words in the same sentence before.
Yeah.
Oh, but look, I mean, there's obviously a lot going on in the insurance market, and we've got you here as an expert to talk about this. You've been doing this for a long time, and it's it's a serious topic too, because this is obviously affecting people being able to get houses, get insurance, the cost of all of that. So we'll dive into that, but let's start with the 3-minute background of who is Stephen and C1 Insurance.
Yes, we want to know. Yeah. And like one thing you normally wouldn't tell someone that when you're on a microphone,
and then tell
part
the
of
listeners.
your background. Yeah.
Got it.
Go.
So Stephen Franke founded C1 Insurance Group back in October of 2011. Been in the insurance world for 15 years. Specialized in the personal line space. So property and casualty, personal lines, home and auto insurance. Simply put. Insured billions of assets. We've grown to the top 1% of all independent agencies in the United States, and happy to be here. Excited.
Awesome.
Yes.
So let's go into the first part of it. We've got insurance costs continue to spike on a massive level, especially over the past 5 years. Let's talk about that. What's causing it? What's happening? Give us some background.
Yeah. So starting back in 2017, California was kind of a tipping point with the wildfires that happened in 17 and 18.
It always goes back to California.
Yeah.
So it's our fault.
I'm a Texan, so I've got my opinions on that, but we'll leave them. We'll leave them in my head.
I know.
I'm a Californian, and I've got my opinions.
Yeah.
Seriously.
Go ahead.
But 2 years back-to-back multi-billion-dollar events. And prior to that, there had never been an event, with a genesis point from wildfire, in excess of $5 billion ever. So, you see those stack and double tap like that. It was kind of a tipping point. And then you go to the other side of the United States over in Florida. There were, just significant issues with regards to tort reform, frivolous lawsuits against insurance carriers, hurricanes, sinkholes, things like that. And all this has started to happen, and it started to roll back in 17, which is all driving to profitability issues for carriers. And it's just been, jet fueled with the COVID experience and the inflationary effects and cost of supply chain, things like that. It's been a unique sprint.
So I have a question, because I think all of us, and me included, probably think that insurance, we don't have the best opinion of insurance companies.
That's the four-letter word.
not the insurance people. You're
yeah,
great,
not the
but,
ones that are bringing it, but the companies that underwrite it. Yeah. You guys are pretty cool. So, but I think that, you see these things on Congress. It's like, insurance policies are doubling and insurance companies are going, oh yeah, we can't do this. And then you see like, $1 billion profits. So is that false? Is that, are they trying to understand their risk long-term? Like what's some of the thoughts on that?
Yeah. So, I mean, general thoughts is we've gotten to a spot that we're in as a consumer base because of the insurance carriers. And so what I mean by that is for years and years and years, insurance carriers were driving the consumer behavior, the consumption of insurance to be commoditized. So they're focusing the client for years of discount, double check, 15 minutes, 15%, all these things that we all know. And so they're approaching insurance as a commodity, when in reality it's not. It's a financial tool. So what's happening is that all these insurance carriers are starting to bring on all these new clients. They're gaining market share because they're driving to the bottom line. Well, the issue that presented itself is that if you're underpricing a solution and gaining market share, that's a bad situation for a carrier whenever catastrophic events like wildfires and hurricanes happen.
If you're competing on price for a long, long time, then you have a pivot like you talked about where there are more expenses than there have been historically because of these what were once unique events that are now becoming more common because of we got houses where we didn't used to have houses and cities where we didn't used to have cities and all the reasons for it. All of a sudden your actuarial table falls apart, right? Because you put such downward pressure on price and upward pressure on expense. That makes sense.
Yeah.
You mentioned briefly COVID and some of the inflationary pressures that came into real estate on top of some of these sort of calamitous events that became more common. Unpack that. Like, what did the supply chain, how did that influence insurance? Because, insurance is an idea and a concept. There's no supply chain for a concept, right? So how did the supply chain break insurance? That doesn't make sense.
Yeah.
It's called
no,
bullshit.
great question.
Right.
Super unique event, right? In all facets of it. And it continues to unfold and it continues to impact us today. So supply chain and just general inflationary expenses, claims are continuing to roll. So there's consistency in the claim volume, but the volatility and the severity of them have increased. You blend in, a 300% spike on lumber at midstream of 2020. And if we've got wildfires or hurricanes or things like that,
right,
and they're having to reconstruct these homes, these insurance carriers are not modeling for a house that would traditionally take $100,000. It's going to be now $400,000 to rebuild just because of materials. And that's just so difficult and impossible to predict. Insurance carriers, they like to believe that they can predict the future, but unfortunately, they're constantly reminded they can't do that. So
they didn't. Go ahead, James. Go ahead.
I was just gonna say that. Well, finish your question, Keith. Because I'm gonna take this off track. My brain's going a different direction.
No one could model a 300% increase in lumber, a 200% increase in labor, and basically everything you needed. If a tree fell and hit a house, it used to cost X, and over the last several years, that's gone up to X times 3 or whatever. And no one had that modeled in on top of everything else. Plus, imagine if you're staying home more. I don't know, maybe there's fewer auto accidents, but probably more trip and fall hazards or whatever, right? So
you got it.
You can see how everything, we built it one way and it all shifted the other way. Interesting.
Well, so now I'm going to ask my question because that's a really good lead in. So NOAA, National Oceanographic, I don't know, whatever the other two letters stand for, but they're basically NOAA came out with a new.
Is it weird that if it has to do with the ocean, and isn't Noah the dude that got ate by the whale?
I don't know. I have no idea, but it's just NOAA, whatever that stands for. Then we're not talking about Moby Dick, Keith. So we're that was just a way of me calling you a dick this morning. So, so basically, there it is. Somebody had to go take it there,
and they got to figure out how to put it in this one.
No, but so NOAA came out with a new report that I think is
Oceanic Atmospheric Administration.
There it is. Okay,
yes,
so
National Oceanic.
They came out with a new report showing what they project, and everybody's gonna have an opinion on this, but let's just take the time frames and say that there's somewhere in accuracy here of within 20 to 50 years. That number has been coming down. I will state it was used to be like 50 years and 75 years, and now it's like coming down less. Of essentially the effects of climate change and what it will do to, essentially flood maps and risk of fires and all of these things. Now, I can state, in living in California, we are feeling the effects of this. We have seen drought on a massive, massive scale we've never seen before in the history of the state. Massive fires because of these droughts. Whatever. The point is the climate's changing. So how... We talked about them not understanding risk. You mentioned with supply chain issues and just how could you know a tree was going to be 200% more than what it was a year prior. Well, now that they've got these reports where they're saying this is what the future looks like, and it's not pretty. Like if you look at them, I not to take it off track again, but is there a disclosure item here? You can take that in a different podcast. But what are they going to start pricing that into the policies because they can see, this is going to get worse, not better. What's your take on that? Are you seeing that already? Is there conversations about that?
Yeah. No, I mean, it's absolutely going to be priced. It's in the conversation phase. It's like, how do they model it and how do they trend? Because there's a balance of collecting the appropriate amount of premium, offering the layers of protection for the event that potentially will come, but also protecting the cost equation to the consumer today so that they continue to consume the insurance. So there's like a balance there. And so
if you factor, the more you factor in and the more you try to, see what's going to happen. Well, every time you do that, you're going to add to the premium, right?
Yep.
And if you add enough to the premium, you might be well protected, but no one will buy it because the little lizard will save you 15% in 15 minutes. It's not a lizard, is it?
So then I'm going to ask this question just out of a strange way to do it. If it's going to get too expensive, then one of the ways that they try to make it less expensive is get everybody into the insurance pool. I mean, that's the concept, right?
That's a path.
More people in, spread the risk, right? So does it go down a road where it's like everybody has to pay for X type of insurance in order to cover everybody else? Like, I don't know. I'm going on a track here.
Yeah, I mean, that's what's happening in Florida. I mean, right now, the citizens pool for property insurance is that it is a true communal pool that on an annualized basis, there is a assessment on the policyholder. And so that's a government-backed solution. So even if like I'm going to pay my premium, whatever that amount is, and then on any given annualized basis, citizens could come to their insured pool and say, we need to collect an additional X amount because of Y reason. Right. And so that's a path. I don't think that that's going to be consumed by the general consumer base.
By the country?
No. Yeah. A thought that's been presented in my world is kind of how we approach health insurance and in specific emergency events. So it's kind of a co-insurance scenario that's presenting itself as to an optionality, meaning if you have to go to the ER today for whatever reason, your major medical is going to cover you for whatever percent. You're on the hook for the delta. And that is a path that I think is going to start to present itself because it's different than a deductible because you're sharing in that expense that's one-off. That's probably a path that would be more consumed. The assessment path, I don't think that is going to be a product that's going to be presented in the private market. In the public, in the public market, maybe.
Maybe states will roll that out. So what I hear you saying is some way, shape, or form, whether it's premium, medical style copay, state funded, we'll all kumbaya insurance together, and then I'll call you once a year and ask for more money, and we'll pass the hat. But no matter how we do it, insurance costs are going up. Period. End of story. Yeah.
Well, okay. So, I mean, everything's continuing to go up. It's like getting ridiculous. But
this will be an increase that everyone's going to see and experience, like feel at a real level, right? This will be a substantive increase in cost of insurance.
And it's unique, new, and highly disruptive because people are not used to seeing it in the insurance world. They're used to seeing a 3, 5, 7% increase, not a 30, 50% increase.
So now Geico is going to say something like, give us a call and we'll only increase your premium for 15% in 15 minutes.
They're just not marketing anymore. They're just going to say, hey, no mas.
Right. So here's an interesting one. So I think about this. We had for those of the listeners who remember the Paradise Fire in California, for us it's genuinely something everybody in the state of California is aware of. It was an absolute catastrophe.
I mean, literally wiped out a town.
It did, and it killed a lot of people. And my wife was one of the reporters that got to go there, that was there basically after, and it was difficult for her. Let's put it that way. So, I remember we went to. It's a story, but it's really fascinating. There was a producer that went there to talk about this town and essentially how it was developed. And in essence, this was a rural town developed in a place that is a giant disaster for fires, and it will happen again. There's one road in and one road out for this town. And the fire was moving at 80 miles per hour, and there was no way for people to get out. So what was interesting about this documentary was how they went back, how the town is rebuilding. And the insurance companies were talking about if you build it with different materials that are essentially more resistant to fire, and you change things like this, I'm not making this up, you change things like getting rid of the type of gutters that you have, because what people don't know about fires, I'm acutely aware of this because of my wife, it's the ashes that get into the attic or the gutters that start fire, that puts the roof on fire, and like people don't realize this stuff.
Yeah.
They're like, if you do these changes, your insurance policies will be less, but nobody wanted to do it. They were just like, nah, I don't want to pay the extra money for the gutters, blah, 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 blah. So my question, I'm leading into this, is there a point where the insurance companies are dictating the type of building and how things are structured in housing to lower the risk so that we don't end up in a scenario where we all live in Denver, Colorado, where there's no flooding and, you see where I'm going with that? Like, is there a point where they're now dictating in the home building process in order to get insurance?
Yes, in short, and it's going to be communicated based off of like pre-underwriting guidelines, with regards to acceptable risks or not, and it's going to be binary. And so there's going to be solutions out there for traditional built homes that were built back in the 50s, 60s, 70s, and they're going to be priced accordingly. From a newer construction standpoint, you can talk about building materials, defensible space, fire retardant and fire mitigation tools, in California. Now there is, essentially a lawn sprinkler system, but it's for your house that, can spray fire retardant foam on your home in the event of a wildfire event. And some carriers are starting to, highly recommend it. It's not a requirement, but it's a recommendation. And so there's we got to put as many layers of wool that we can on this thing, and knowing that it may not work, but we got to try. And so
my kids would definitely take that fire retardant foam and turn it into like a giant slip and slide off the roof.
Seriously,
I'm not putting that in. I'm not.
Well, so then my question there is, if the insurance companies are saying all of these things and dictating that. I mean, like in California, so I have a house in the mountains, and they do risk every year. They come look at it and tell you to, cut stuff back. I know that it doesn't actually going to do anything, because when these wildfires are going in the fire crowns, like the house is going bye-bye. It doesn't matter how much defensible space you have. It's like bye-bye. So, is there a point where they just stop insuring altogether because it just makes no financial sense? We're almost there. There's no Allstate. There's no State Farm. They're all basically gone in California. For those of you that don't know, we have like no insurance opportunities anymore in the state of California. They're just not writing new policies. Go a little bit on that.
Yeah. So yes, in short, there's going to be a consolidation of options. The optionality is going to be ranging from the public plans, the fair plans, or the citizens, or, here in Texas, it's also called the fair plan.
Which isn't fair, by the way.
Yeah.
Lovingly referred to as the unfair plan
The
by
unfair
many
plan.
Californians. Yeah.
What needs to happen is that carriers need to have the ability to breathe so that they can serve the consumer. And so here in Texas, regulation, just general regulations are relatively low. California, it's kind of the opposite of that.
It's not kinda. No. You can state it.
I'm
It's not
wading, I'm
kinda.
wading into a dicey pool here. And,
You're so polite. You're
Yeah.
so polite.
Yeah.
I know. And so there has to be an opportunity for the carriers to breathe, and they have to, and that is in the protection of the consumer. The current behavior is, hey, we have to mitigate the ability for a carrier to increase rate, and that is protecting the consumer. What the unfortunate unintended consequence of that is that carriers are just saying, hey, we can't operate, and so the Department of Insurance has to kind of adjust their mindset in the state of California, because from an optionality perspective, like what you're talking about, James, that is a true protection of the consumer. And so the carriers have to operate in a profitable way. They are for-profit entities. They're not for profit. They like to make money, love it or hate it. And so in this interim period, to go back to your question, optionality is going to be limited. There's going to be times where carriers are just going to say no, and that's going to be an unfair plan situation, or they're going to go into what's called the E&S space, the excess and surplus space, which is a non-admitted solution, which is pretty regular in high-risk areas. So it's a product that's written by your traditional insurance carriers that doesn't have to be filed and regulated by the state in which they're operating in. So it gives them a lot more flexibility to write and manuscript a solution that is catered to that area. Now, is it a better solution to the consumer? That's in the eyes of the beholder. But does it provide a product? And is it going to serve them better than the unfair plan? Absolutely, for specific events. It's not going to be
Just
voluminous in nature. Yeah. And so
And do you see a point where they just go, nope, we're just not going to provide any insurance, period, in a story, because you live in, I don't know, I'm going to pick on New Orleans, even though it's one of my favorite cities. You're 10 feet below sea level and the sea levels are rising, and no. Is there a point where they just go, never going to happen anymore?
I'm not going to live in the absolute on that. And because there's always going to be an opportunity. We do operate in a capitalistic environment. And so, carriers are going to look at that and they're going to say, how can we strategically approach it? And how do we hedge with regards to the solutions which we're presenting, whether it be by paring down layers of coverage or deductibles or whatever?
It's more likely that the market gets priced out than they just say we're out, right? They'll just keep raising price until no one can afford it.
Until nobody can afford it. Yeah.
Right.
Yeah. Or they just say we're not. I mean, California, they're not writing. They're just saying, nope, we're not doing anything right now. So I'm assuming they'll come back. Do you feel like they're going to come back? Yeah. Okay.
I think they will. I mean, California is too much of an opportunity for insurance carriers. They just need to be able to breathe a little bit.
Yeah. You can't. I mean, if you're going to be a company, you're not going to California, right?
Yeah.
There's just too many people here to sell insurance to. So, I'm a real estate agent.
Mm-hmm.
I'm putting deals into contract, and I feel like insurance used to be something that you could sort of forecast, right? It's going to cost X. It's usually between X and Y in price. And candidly, now this was a long time ago when I was selling property, but I mean, insurance was sort of something we figured out the last few days of before we closed. Like, oh, right, we got to get a hold of the insurance guy. You jump through the hoops and, couple forms and presto, we got insurance. It doesn't sound like that's the case anymore. So I'm an agent. I'm putting things into. How should I treat insurance differently in this market environment right now, regardless of what state I'm in?
Yeah. No, I mean, pull it forward in the process. As clients are even just simply looking at properties, they're saying, hey, I've got these 3 properties that I'm looking at. I really like this one, but I like all of them. Connecting with an insurance agent and with regards to insurability and cost is something that should be aware of at the beginning of the journey.
Yeah.
Now, assuming that it's got a green light, go forth and conquer. We'll get it situated here in due time. But the last thing that needs to be done is you get to the last week and you're like, holy smokes, insurance is twice as expensive or 3 times, or it's uninsurable. Then you spend a lot of time, money, and resources in that journey, and the mortgage company is going to say, like, you got to get insurance or we're not going to give you this money. And
so in the same way, when I sit down with a buyer for the first time, what I hear you saying is in the same way that when I sit down to go start to look at houses, I figure out the mortgage piece right away, right?
Correct.
I also need to start to figure out the insurance piece even when I'm looking at property in like at that phase. And if I haven't at that phase, for darn sure, within the first few days of getting into contract, instead of it being in the last few days, it better be in the first few days of getting into contract. Is that
correct?
An accurate snapshot?
Absolutely. I've been advocating for that for a decade. Understanding insurability, understanding, bill of health on that property with regards to, prior claims and things like that to the real estate professionals that I worked with over my career. Understanding, kind of in those states that offer the option period, this is your time to find a reason not to buy this house.
Right.
And insurance is a component of that.
So when it comes to insurance, just to peel back that onion a little deeper, how much is the human and how much is the house? Like, is it
great question.
Is it 20% the person and 80% the house, or
it's I wouldn't put it on a ratio like that. So how the insurance carriers, they look at it as a subject, that's the human, and then the risk is the house.
Gotcha.
And so the subject is a behavioral thing, and then the risk is just propensity for damage.
I'm feeling judged right now. I feel like you were looking me right in the eyes when you said
by the
behavioral.
Yeah.
He's like,
you're a higher risk. Yeah.
Into your soul a little bit.
I'm thinking to myself, is the future, we have a pod that's going to be from an MLS executive, and it was fascinating talking about where MLSs are going, especially in this very innovative one. It's the biggest in the US. And do you see it being where when a property is for sale, the carriers are putting out sort of quotes on the property as here's the details and here's the insurability of it and here's 4 different carriers that can provide fire insurance? I'm making this up, but like, do you think that's part of a menu down the road?
Or to piggyback on James, would it be maybe like there's a rating, right? Like, oh, this is a low risk A property,
insurability rating.
Sure.
Yeah. I mean, I think that's on path. Really right now, it's unfortunate. The insurance world is continuing to innovate and continuing to digitize itself, but it's still an archaic business. And so there's continual disruption, just like in the real estate space. How much can technology take on the realtor? Obviously, the realtor still is cemented in the real estate transaction, and will be
damn right.
That ain't changing, bro.
And the insurance agent, surprisingly enough, is constantly fighting the same battles in a different lane. But we're continuing to be put in the forefront. So I say all that, the path to insurability, the path of an insurance, rate, risk score, it's going to be done through an insurance agent. The insurance carriers, they have learned that going straight to the consumer with technology, they're unable to assess that risk appropriately. Right. And so with working, now there's going to be tools that are going to facilitate an expeditious fashion to get that for the insurance agent channel. But, the path to answer your question is like working with an insurance agent that can do that and has the tools and resources to be able to get that for you in minutes, not hours, not days.
What's interesting is this was a really good question that he was asking, because I was just literally having this conversation with a friend who's selling his house here in California for a godforsaken amount of money. And we were having the conversation with the agent was explaining to him that one of the things that might pop up is the cost of insurance because he's in a very high risk area. And I was like, well, it's a $4 million house. I'm pretty sure they can afford the insurance policy, but the point's the same. Like, what is that particular cost going to be? And I'm making this up, but if it's $12,000 a year, it's $1,000 a month. That's like half a mortgage payment in most of America, So it was interesting that this question is just fascinating to me because the agent was starting to think about how do I get insurance into the conversation earlier. So I've got my appraiser, I've got my termite guy, I've got my insurance guy. You need to talk to him. You need to talk to my loan officer. It's interesting to me how, I'm going to go on a tangent for a second. I think it's important. Like, everyone keeps talking about how you automate this experience. And I'm going, I don't see how this goes this way. You just told me that I need to talk to a human because part of that is the human. We have to look at the risk of the property. We have to look at the human. And I'm sitting here going, like, you need somebody to help facilitate this so you don't screw it up. So you don't get into contract. You're at the last minute. You realize the insurance is going to cost you significantly more than you can afford. And maybe this is a first-time home buyer, better example, where they're already stretched as it is. These things are huge, and our industry has to be paying attention to it. Again, facilitating people through the right decisions so they don't get stuck and then lose their deposit or whatever else they put down and make this property come together. So
I'm going to piggyback on that because I think this is what we do as an industry, right? As an industry, our job as residential real estate professionals is to understand the potential risks and pain points for our clients, and then help find solutions through great partnerships and, the right insurance person and the right home inspector. That's our job. And so, something just got added to our job that historically hasn't been there. We now get to worry about insurance too. You can either be frustrated by that, or you could be like, hey, that's more job security. I'll keep providing amazing service to the people that I serve. I didn't 2 years ago, 3 years ago, 5 years, whatever. I didn't talk about insurance. Now you get to. Don't like it? Don't do real estate. This is literally, people are using that word a lot lately, but this is literally what we do. So be frustrated, I guess, but just accept that that's the job.
Change is hard. You have to innovate and disrupt and adjust the workflows. For sure.
So to kind of put a bow on this, insurance is going to get more complicated for a while. There's lots of things that can essentially cause these issues. They're trying to figure out how to insure properties in a changing environment and climate, candidly. And the agents need to sit down and bring a really trusted insurance advisor. By the way, Stephen's company, so everybody knows. They need to bring a trusted insurance advisor into this process so that when their client is looking at houses, this is actually really interesting. Like, they need to be working with their insurance agent on every property they're thinking about writing an offer on. So in advance of writing that offer. So it's interesting how this is shifting. Stephen, it's been really great to have you on our show. I know this was extraordinarily useful for our listeners. They can start to make some changes and not be behind the eight ball on this. So we appreciate you being here very early to do this podcast with us, at least for us. Really. So
loved it. Fun to riff. Yeah.
Appreciate you.
Awesome. We appreciate it very much.
Thanks, Stephen.
Yep. Will subscribing to this podcast save the real estate industry as we know it? Yes, it absolutely will. Subscribe now and you'll be able to find out if I'm right.